DT, direct taxation. First of all, the question comes in my mind, is it new, totally new to you? Then answer is no. It is part of our day-to-day life discussion because we all are every year hearing budget. And after budget, we are discussing certain impacts in terms of taxation on individual or on businesses. And we are a student for management, business management. So being a student from this field, we try and analyze how these budgets which are presented every year, how they are creating impact. So ultimately our task is we try to interpret on the basis of certain resolutions which are taken by the government and how they are going to create impact on it. Today when we begin with our first chapter, that is the introduction to direct taxation, right? Before learning the tax computation, it is essential to understand the basic concepts. Directly, we will not in position to calculate tax liability, taxable part. We have to know essential concepts, terminologies of Income Tax Act. What is direct tax? What is indirect tax? What is the income? Then how we differentiate income and agricultural income. Then what are the things which we supposed to take into consideration while calculating agricultural income? Which are the sources which are not considered as agricultural income? What is the meaning of person under the act? What is the meaning of assessee? What is the meaning of deemed assessee? And then what is assessment year? What is previous year? This AY and PY. A is standing for assessment year, the year in which income is assessed. And previous year is the year in which income is earned. GTI, gross total income and total income, residential status, exemption under section 10, and new regime versus old regime. These are the uh, things which we can take into consideration when the matter of first chapter comes. Right? Now, when it is the introduction to Income Tax Act, the Income Tax Act 1961 is the primary legislation governing the taxation of income in India. I'll repeat. The Income Tax Act 1961 is the legislation which governs the taxation of income in India. Whenever a person earns income, the government may levy the tax depending upon the nature of income. Now, for that matter, we should know the term person. Again, I'll repeat. Whenever person earns income, the government levy the tax depending on nature of income and the previous year of that act. So here we should know when the income is earned, who has earned, which type of income it is, and after knowing income source, you can think of tax liability. That may be a capital gain, that may be income from house property, that may be income from salary, that may be income from business or profession or any other source of income. Which exactly is the source of income that has to be identified. When income is earned and by whom it is earned, it should be known. It should be known. Today, we will first understand the basic concepts of direct tax and indirect tax. What comes in your mind when we talk about direct tax? Tell me. why you call income tax as a direct tax and why you call GST as indirect tax? What comes in your mind to call this income tax as the direct tax? बोलो, क्यों है इनकम टैक्स डायरेक्ट टैक्स, क्यों है जीएसटी इनडायरेक्ट टैक्स, क्यों है? The tax which is directly paid by taxpayer to government, and that tax burden is not a transferable. That time, that tax is known as direct tax. Income is earned by X, then income tax liability of X supposed to be there. Sometimes that tax is deducted at source itself. Source is paying on your behalf, but when it is paid on just on your behalf means ultimately responsibility is lying on the shoulder of X. Income tax, corporate tax, capital gain tax, these are the examples of direct tax. These are the example of direct tax. What about indirect tax? Direct tax is tax directly paid by government, paid by the taxpayer to the government. What about indirect tax? Tax collected by intermediaries and paid to the government. Now GST is again paid by end user, but whether he is responsible for paying it, no. He is paying to mediators, those who are in the process of selling. They are supposed to pay. They are supplying the goods, they are supplying the services, and as they are supplying services or goods, they are bound with this activity of payment of tax towards government. GST returns are filed by these mediators, intermediaries, whereas income tax return is filed by individual. One who earns money is supposed to pay tax return. Now here in indirect tax, if we want to take example, best example for that matter is the GST. Now what we do in GST, suppose you purchase a mobile phone worth rupees 20,000, or even if we consider iPhone you might have bought, then if it is costing rupees say around 1 lakh, the shopkeeper collects GST from you and deposit it with the government. Although seller pays the government, but tax burden is actually borne by the consumer. One who is consuming, one who is working as a customer. I'm instead of saying consumer, I'm saying customer. Even though he has or she has purchased and paid that GST amount, but he is not responsible for filing return and making payment of that particular amount of GST to government. Who is responsible? The seller. आईफोन का जिसका शॉप है, जो बेच रहा है, वो सेलर ही जीएसटी रिटर्न फाइल करेगा. This is the short differentiation for direct taxation and indirect taxation. Now here we can get few points where the distinction we can do. Basis: tax imposed directly on the income or wealth of person or the entity. When I'm saying entity, because it comes under the definition of artificial person. Under section 2 of Income Tax Act, person is defined as an individual, group of individual, association of individual, or two or more people association, it may be partnership firm in that case, it may be joint venture in that case, joint stock company, Hindu undivided family business, then any organization which is registered under Charitable Trust Act is a person. For that matter, all temples we can consider as a person, and they have income source. Then for that matter, they're supposed to file a return where they will explain which are the sources of income and where they have spent and what is their tax liability. Then next is all local authorities, if they are governed, they are running their business operation, they supposed to be considered as the person because they have their income source. So person or the entity is the basic matter of concern to whom tax supposed to be imposed in direct taxation. Indirect tax imposed on goods and services and collected through the intermediaries. Here intermediaries playing important role in direct taxation. Intermediaries are not important. The person or the entity is playing important role. Burden of tax cannot be shifted to another person, and in GST it may be shifted to another person. That is the reason tax credit part comes in picture. Paid by directly by the taxpayer to the government, collected and collected by seller, manufacturer and paid to the government. So directly not paid. Incidence and impact fall on the same person. Fall on the same person. If I'm unable to pay, who will be held responsible? It's me who will be held responsible. Now here the tax liability fall on different person collected from one or and borne by another. Basis of levy based on income, profits and wealth, based on consumption, sales, production of goods and services, which type of good it is, when it is sold, where it is sold, at what time it is sold. On all these factors, the calculation of GST are dependent and accordingly it has to be paid. Any doubt in this? Because this is the important part of discussion may come in the examination. State and explain direct and indirect tax, give the differentiation. 5 मार्क्स के लिए भी आ सकता है, 2 मार्क्स के लिए भी पॉइंट आ सकता है. Now when we talk about direct tax, as we know, direct tax is paid by that individual who is earning money or the person who is earning money. When I am saying person, as I said, few points which are discussed under section 2 are important from the point of view of income tax. One who is earning is responsible for income tax. It may be joint Hindu family business, or it may be joint stock company. It may be any organization which is registered under Charitable Trust Act. It may be any business which is under JV where contract is involved and intention of earning money is there. One who has receipt payment, who has income and expenditure, supposed to file income tax. Corporate tax paid by the companies, capital gain tax on sale of assets. These are the example of direct taxation. Indirect taxation, best example as I said, it is GST. GST paid on purchase of goods and services, custom duty imposed on imported goods. So in short, what we can say, direct taxes are levied directly on income or wealth of taxpayer and cannot be transferred to others, whereas indirect taxes are levied on goods and services with the burden ultimately borne by the consumer. Both are important source of the revenue to the government and play significant role in Indian economy and Indian taxation system. Now you just answer me, which tax you pay every day without filing return? Answer from you I am expecting. We have seen direct taxation, we have seen indirect taxation, and based on discussion I am asking you, which tax you pay every day without filing return? Shall I repeat again? You need not to file return, but you supposed to pay.
Indirect tax like GST.
Goods and
GST.
service tax.
Good, good. Being a customer, when we buy, we pay GST. It is cost to us, right? It is paid by individual, one who is consuming, one who is buying. But return filing is not obligation on his shoulder. It is the duty of mediator who are selling the commodities, supplying the commodities, right? Thank you. Now, when we think of this income, what does income mean? Income is much broader term than the salary. One of the element of income is a salary. Income is not only have a source in terms of salary. One of the source of income is salary. Individual or the person, we can say, has many sources. If it is a business, business gets profit. If we invest, we are after investment we generate returns in terms of capital gain. If it is of shorter duration, short term capital gain. If it is of longer term, then it is long term capital gain. When we are investing in constructed premises, we call that as a house property. Income from house property is another source of getting income. And if not in these four sources your income is lying, then it's supposed to lie in this category of other sources of income. So five heads of income are under Income Tax Act: salary, house property, capital gain, income from business and profession, and fifth one is other source of income. Any doubt in this? Now, section 10 of Income Tax Act, subsection 1, is talking about the agricultural income. Agricultural income generally means the income derived from agricultural land situated in India. But agricultural income generally means the income derived from agricultural land situated in India after harvesting, after cultivation. These things are important. That land should be located in India. Farming activity is supposed to be done there. Based on that, if you are getting income through crops, sale of crops can be considered as a source of income through agricultural income. Now here, if that farm is given for let out basis for certain marriages or functions, we can say, is it agricultural income? Bolo. This slide is important when it is asked, state and explain agricultural income. You have to write all such small points and important point. And we should be specific with words. Agricultural income includes rent revenue from agricultural land which is located in India, income from agricultural operations, income from cultivation, sowing, planting, harvesting, etc. Sale of agricultural produce after performing the basic agricultural operations. Income from farm buildings. Income derived from farm buildings used for agricultural purposes. Income from sale of wheat, rice, sugarcane, fruits, vegetable, etc. is agricultural income. Rent received from agricultural income, agricultural land. Income from nurseries growing the saplings and seedlings. Income from dairy farming carried out at part of agricultural operations. If I'm having poultry, small poultry, and doing all the activities, is it a part of agricultural income? Dairy farming, ये होता है agricultural income, but poultry farming is not the agricultural income. Income from dairy farming independent of agricultural land. आपने लैंड अलग से लिया, वहां गाय भैंसे रखे, उधर से आपने ये डेयरी का बिजनेस स्टार्ट किया. आपका बेसिक इंटेंशन फार्मिंग करना है ही नहीं, आपका बेसिक इंटेंशन है डेयरी फार्मिंग करना, और वही करते हुए आपने इनकम अर्न किया, तो वो एग्रीकल्चरल इनकम के हेड के अंडर नहीं आएगा. Income from dairy farming independent of agricultural land. Income from fisheries. Income from trading in agricultural produce without cultivation. If I have a shop in market yard and getting grain from farmers and selling that to another merchants in a market or a household people, that activity is not generating income after farming activities. That is just a trading activity. So that is income from business, not income from agriculture. Income from processing agricultural produce beyond the ordinary process necessary to make it marketable. Now here, one thing supposed to be understood necessarily, that if processing is done in a farm, then it is considered as a agricultural income. But if it is done beyond the farm, that specific place, then that is not agricultural income. Best example to remember this is production of jaggery. Income generated from that particular jaggery which is produced on farming land, then that is considered as agricultural income. But sugar cane, शुगर फैक्ट्री में जाएगा, शुगर बनेगा, तो वो एग्रीकल्चरल इनकम नहीं होगा, बट जैगरी का कंसीडर करते हैं. कॉटन, कॉटन प्रोड्यूस करते हो, कॉटन सेल करते हो, रॉ कॉटन होता है, that is considered as an agricultural produce, and income which is generated against that particular crop is agricultural income. But if it is cleaned with the help of ginning machine which are located in farmland, might not be considered, because it is processing, refining your output which is produced from the land. And here few people are also contributing, they are bringing their raw product here and they are trying to refine it with the help of ginning machine and doing that activity. So what we are doing, why we are doing, how we are doing, and how much amount of revenue we are getting, that matters a lot. And for defining that, There are many places we consider them as an agricultural land, but government may not think. Lawns. We are using lawns for parties, functions and all. Even though it may be an agricultural land, but income against it is not the agricultural income. It is the business income. It is the business income. Any doubt? So poultry farming, fisheries, trading in agricultural produce without cultivation, these are not at all the agricultural income. Agricultural income generally exempt under section 10 subsection 1. However, when agricultural income exceeds rupees 5,000 and non-agricultural income exceeds the basic exemption limit, it may be considered for the rate purposes through the partial integration. Mr. A earns agricultural income 1,50,000, salary income rupees 8 lakhs. Agricultural income exempt, but it may be considered for the rate purposes under the partial integration while calculating tax on salary. Derived from agricultural land, features of agricultural income, important part. Derived from agricultural land situated in India includes cultivation and related agricultural activities exempt under section 10 subsection 1 used for the rate calculation in certain cases through the partial integration. In simple words, agricultural income is the income earned from agricultural land and farming activities in India. It's generally exempt from income tax. Person under Income Tax Act. Agricultural income is over. Any doubt in agricultural income explanation? Say, remembering is the only one task which you have in income tax. Once you remember forever. Because it requires practice, it requires understanding, and it requires your approach, practical approach towards the income tax. Now the person's definition as the basic concept of Income Tax Act, which you supposed to understand, or when we being a student we are reading this Income Tax Act. Person under Income Tax Act, subsection 2 of this Income Tax Act deals with this. Person includes individual, person includes association of individual, group of individual, Hindu undivided family business, joint stock company, body of individual, local authority, any organization which is registered under Charitable Trust Act, and artificial judicial person. Now here we have to remember one thing. Every assessee is a person, but every person is not necessary being assessee. Another term which is closely related with the person, that is the assessee. assessee और person से related एक ही line याद रखना, हर एक assessee is the person, every assessee is person, but not every person is the assessee. It means that person who earns money is known as assessee. Person who is not earning money but remains the person. So for becoming assessee, for assessing your income, you should have a ability to earn. An assessee is a person who is liable to pay tax or against whom proceedings are initiated under the Income Tax Act. Assessee is the person who is liable to pay tax or any other amount under the Income Tax Act 1961. The term includes every person in respect of whom any proceedings under the Act has been taken for assessment of income, loss, or tax liability. What does it mean? It is nothing but the definition of assessee, where it is said that income supposed to be assessed by for every person who is earning in the assessment year for the previous year in which it is earned. According to section 2 subsection 7 of Income Tax Act, an assessee means a person by whom any tax or any other sum of money is payable under the Act. Any problem? Now these are the 4 types of assessee. Which are 4 types? One is normal assessee, another one is representative assessee, third one is deemed assessee, and fourth one is assessee in default. Normal assessee is the person who is liable to pay tax on his or her income or profits earned during the previous year. I, as a salaried employee, if earn money or earn salary in previous year, then it's my duty to pay income tax return. So I belong to which category? Normal assessees category. Representative assessee, a person who pays tax on behalf of another person. Like if I'm keeping certain tangible amount on my kid's account and all the interest is credited in his account or her account. So on their behalf, guardian of minor supposed to pay return. As my kids have not earned money, whatever interest they are getting just because of my money which is kept on their name. So ultimately, guardian, being a guardian, I am held responsible to file return, to get assessment of return done and file return. Trustee of trust, agent of non-resident. Sometimes power of attorney is done. On the basis of power of attorney, certain incomes are generated. If my brother is staying out of country and he has a flat, but for dealing with agent he has given dealing with the tenant he has given power of attorney. So whatever income is generated through that, particularly house property, I am representative assessee of the person whose property it is. Deemed assessee, a person who is deemed to be an assessee under the certain provisions of Act, a legal heir of a deceased taxpayer who is responsible for tax liability of deceased one. Now, if you couple is there and unfortunately one of the person from that pair is deceased or getting certain mishappening, who is the survival? That survivor is supposed to be considered as deemed assessee. Now here we can consider why that deemed assessee terminology came in picture. Many times certain death occurs in the family. Till death that person is earning, and after death earning gets stopped. But during that particular year, whatever amount of money he or she might have generated is ultimately generated for the family purposes, for requirements. So those who are claiming that money is their nearer ones and dearer ones after his or her death, they are considered as deemed cessee. One who is claiming supposed to file return on the income whose income was not in position to get assessed due to any health emergency. Assessee in default, a person who fails or fulfill the statutory obligation under Income Tax Act, an employer who deducts TDS from employee's salary but fails to deposit it with the government. Assessee in default. Who can be assessee? Then the following can be assessee: individual, Hindu undivided family, company, firm, association of persons, body of individuals, local authority, artificial judicial person. So all assessees are person, but all persons are not assessee. Accordingly, whatever comes under person's definition can be considered as the assessee. Suppose Mr. X earns a salary of rupees 8 lakhs during the financial year and liable to pay income tax. Mr. A is an assessee under the Income Tax Act. Every assessee is a person. Wait for 5 minutes. Every assessee is a person, but every person may not be an assessee. An assessee may be liable to pay tax, interest, penalty, or any other sum under the Act. The concept of assessee is a fundamental to income tax assessment and administration. Previous year. So you understood the term assessee and person. I guess it is clear. Now another two concepts which are important. One is previous year and another one is assessment year. Previous year in which income is earned. Previous year in which income is earned. The previous year is the financial year in which income is earned by the assessee. As we know, financial year starts on 1st April, ends on 31st March of following year. Income earned during the previous year is assessed to the tax in the next year. Income earned between 1st April 25 to 31st March 26, then previous year is 25-26, whose assessment year will be starting from 1st April 26 to ending on 31st March 27. This is the definition of assessment year. The assessment year is the year immediately following the previous year in which the income earned during the previous year is assessed and taxed. Like 25-26 is the previous year, the assessment year is 26-27. And we are following all guidelines of assessment year of 26-27. for the purpose of calculation. Now, what is the gross total income? Aggregate income under the 5 heads before deduction under section or under chapter 6 schedule A. Gross total income GTI is the total income computed after adding income from all 5 heads of income before allowing deductions under the chapter 6 section 80C to 80U. Definition: according to Profit and Gains from Business to Income Tax Act, gross total income means aggregate income computed under the following 5 heads: income from salary, income from house property, income from business and profession, capital gain, income from other sources. Formula is gross total income is equal to total income under all 5 heads of income. Now, just for easy understanding purpose, income from salary after going through certain deductions and all, if it comes to 6 lakhs, income from house property if it comes to 50,000, capital gain is 40,000, income from other sources, interest on FD 10,000. So gross total income of my name might be 7 lakhs. Mr. A has a salary income of 5 lakhs, house property income 40,000, other source income 20,000. So gross total income is 5 lakh 60,000. Deduction if he is or she is claiming for under section 80C, then it will be 5 lakh 60,000 minus 60,000 rupees 5 lakhs. Gross total income is calculated before claiming the deductions under chapter 6 schedule A, table A. It includes income from all taxable sources. Exempt income under section 10 are not included in gross total income. Gross total income is the basis for calculating total income. If deduction under section 80C is rupees 1 lakh, total income 7 lakhs, sorry. So 7 lakhs minus 1 lakhs, net total income 7 lakhs minus 1 lakhs rupees 6 lakhs. Gross total income minus eligible deductions under chapter 6 table A. So here another example is given. That example is saying gross total income is rupees 8 lakhs. Deductions under section C 80C is rupees 1 lakh. So total income will consider this deduction. Deduction under section 80D. 80D is for insurance of 25,000 health insurance. So after considering these deductions, total income will be 6,75,000. Now, what is the difference between gross total income and total income? Meaning itself has a different part into consideration. One is under total gross total income, aggregate income under all heads before deduction. and in total income, income after deduction. Deductions are not allowed in case of GTI. Deductions are taken into consideration as per chapter 6A for the calculation of total income. Taxability are not calculated on the basis of GTI. Tax calculations are dependent on total income amount. Income GTI is calculated, gross total income is calculated by considering amount earned against all income heads, income from all heads of sources of money for the individual or the body of individual. That has to be taken into consideration for gross total income calculation. Whereas total income has a formula, gross total income, sum of all heads income minus deductions allowed. Now another basically important part into consideration, that is the residential status. On the basis of residential status, tax liability is taken into consideration. Resident and ordinary resident, resident but not ordinary resident, and non-resident. Resident and ordinarily resident. An individual is treated as a resident but ordinarily resident, ROR. Basic conditions for resident, any one of the following supposed to be satisfied. हमेशा याद रखो, when we consider the residential status, that time few conditions are mentioned. One of the basic condition, if it is satisfied, and additionally whichever conditions are mentioned, if they are satisfied, then that person is considered as ordinary resident. Which are these conditions? In basic condition, which either are supposed to be satisfied, according to that, he suppose or she supposed to stay in India more than 182 days in previous year. If it is fulfilled, then he at the same time he supposed to fulfill the condition, additional both conditions, then he is considered as ordinary resident. एक तो 182 दिन इंडिया में होना चाहिए प्रीवियस ईयर में, ऐसा नहीं हुआ कि आधा साल भी वो इंडिया में नहीं है, तो फिर कम से कम उसको उस साल 60 days and more during the previous year and 365 days or more during the preceding 4 previous year, तो उसको इंडिया में कम से कम 60 days और मोर रहना है, 2 महीने से ज्यादा रहना है, along with 365 days and more for preceding previous year. previous year में 60 days से ज्यादा and preceding previous year, 4 preceding previous years. In those all 4 years is supposed to stay minimum for 360 days and more, 365 days and more. So if at all he is fulfilling first condition, he need not to bother for fulfillment of second condition. But if he is falling short with the fulfillment of first condition and able to fulfill second condition, then he has to fulfill additional conditions which are mentioned. One first additional condition is resident in India. Resident in India supposed to be at least resident out of 10 in 2 year for 2 years. At least for 2 years out of 10 preceding previous year. कौन से 10 साल? प्रीवियस के प्रीसीडिंग प्रीवियस ईयर के. यह प्रीसीडिंग ईयर की कंडीशन नहीं है, यहाँ कंडीशन है प्रीसीडिंग प्रीवियस ईयर. Stay in India for 730 days or more during the preceding 7 previous year. He or she is supposed to be there in India more than how many days? 7 years. 730 days in 7 preceding previous years. So these two additional conditions he is supposed to fulfill along with the basic one of the condition. If he is doing so, he is or she is known as resident and ordinary resident. ROR. Resident and ordinary resident. ROR taxed on income received in India, income accrued and arising in India, foreign income earned outside India. Scope global income is taxable under India. Resident but not ordinary resident. An individual is a resident but not ordinary resident if he satisfies the basic conditions for being the resident but does not satisfy both one of the both additional condition. Tax liability of income. RNOR, resident but not non-ordinary resident, is taxed on income received in India, income accrued and arising in India, income from business controlled or the profession set up in India, foreign income not connected with India is generally not taxable. These are the things which we supposed to consider when resident but not ordinary resident part comes. Tax liability is taxed on income received in India, income accrued and arising in India, income from business controlled and profession set up in India. Foreign income is not concerned with India, is generally not taxable. In case इनकम इंडिया में मिल रहा है तो इनकम टैक्स लायबिलिटी इंडियन है. इनकम किसी बाहर के देश का है तो टैक्स लायबिलिटी इंडिया की नहीं है. ऐसे बहुत सारी चीजें हैं जो हमें पढ़नी है. So shall we end, sir, here? We have seen today the part of income tax starting from direct taxation, indirect taxation. After that indirect and direct taxation discussion, we have seen person, definition of person, assessee, assessment year, previous year, agricultural income. You might be thinking this is very fast I'm taking, but here variety of numericals we supposed to take. For that matter, I require your support. Theory might be taken in fast way. If you have doubt, you can approach me. You can get your doubts clear. important questions which are asked based on this first day's discussion which we have done. That is the what is the point of differentiation from direct taxation and indirect taxation. Then assessee, types of assessee, definition of person, assessment year, previous year, agricultural income, and mm, examples of agricultural income, non-permissible agricultural income. Then what we have, the discussion of residential status, discuss the residential status and conditions aligned with this. So these are the important points with which we supposed to discuss and understand. See, here when I'm going through the attendance, one is 1 plus n double two double one. He has to or she has to rename herself. Gauri, you have to rename yourself. See, we are putting 2025-27 and then roll number. Likewise, you have to rename yourself so that when we will be marking your attendance, online attendance is monitored by your mentor every day. So if it is done, you have to make sure that your attendance is being recorded. Now, the person whose name 1 plus NE2211, we are not getting. Attendance may not be marked. And keep in mind, if you are logged in before time and you are completing then this full session attendance, then and then only it is considered. Partially you are coming for 5, 10, 15 minutes, then even though you are present, you may be getting few things which are important part of your curriculum, but your attendance won't be marked. So make sure whenever you will be attending, your attendance is complete. And another one thing, you have to record your diary every time for OJT. I guess in this group, Praveen sir's mentee and my mentees will be there. So I'm telling you, you have to keep daily record of your work done in your organization as part of your OJT topic. So every day you will write, and on Friday you will share that pic through mail, being a mentee of mine, so that review will be taken on Saturdays 3:30 online meeting. You have to keep your video on and you have to answer. Things are clear? कळलं सगळ्यांना? सगळ्यांना अप टू डेट तुमची डायरी ठेवायची आहे. ऑब्जेक्टिव्ह आता काहींचे सँक्शन करून तुम्हाला मिळाले असतील, काहींचे पाठवणार आहे, आज पाठवते. आणि ज्यांचे सँक्शन झालेले नाहीत टॉपिक, ज्यांना रिवर्कला गेलेलं आहे, त्यांनी ते करून द्यायचं आहे. इफ यू आर डुईंग दॅट ॲट युअर एंड विथ डिले, I will not check. I will not take your excuses into consideration. सी 8ला तुमची ती मीटिंग झाली, सरांनी तुम्हाला ओजेटीचं ओरिएंटेशन दिलं, त्यामध्ये सांगितलं होतं नेक्स्ट डे पासून तुमची चालू होते. मी 10 जरी कन्सिडर केली, 10 पासून 15 डेज तुमचे 25ला संपतात. 26 म्हणजे मागच्या आठवड्यापासनं तुमचं ओजेटीचं काम चालू व्हायला पाहिजे ऑन जॉब. ज्यांचं झालंय त्यांचं ठीक आहे, ज्यांचं नाही झालंय red alert. Due to this, if delay in submission will come, you will be in trouble. So last moment trouble you should avoid. Today we will stop here. See you tomorrow at 6 o'clock. Have a good day.